Thank you for tuning in and welcome back to Homeownership Tips. In today's video, we'll answer the question, what is a home equity line of credit and 5 common ways that people use them all the time. My name is Andrew Finney. Please consider me your real estate geek. I am always here to help. My contact information is in the show more description below and always at the end of every video. If you haven't already done so, please go ahead and take a quick moment and subscribe to this channel now and like this video at this time. Thank you so much. So let's go ahead and go in with what is a home equity line of credit. So just like it sounds, and by the way, home equity line of credit is often referred to as a HELOC, which is the acronym for home equity line of credit, H-E-L-O-C, HELOC. So with the HELOC, what we're looking at is the difference in between the amount of money that's owed on your mortgage and the actual estimated home appraised value. So before a lender actually gives you a home equity line of credit, an appraiser will need to go out to your home, appraise the current value, so that the difference of that could be made available to you in the form of the home equity line of credit, or HELOC if you prefer. So how much, really quick math, how much do you owe? What's the appraised value of your home? Subtract those two numbers equals the amount of home equity that you could potentially be able to have for other uses. And we'll cover some of the 5 common uses that people use it for in a few moments, along with some different things that you might want to consider as far as potential benefits and risks to determine whether this loan product is right for you. So obviously, when you do that, you're going to be looking at typically, it may be borrowing against the home equity line of credit, borrowing against your own home equity for a period of 10 years. Once the borrowing period is paid off, is done, you can actually have to pay back over 20 years all the money you took out. So if you put like $100,000, took out like $100,000 of equity, you're going to be paying that off almost like a second mortgage if it's $100,000 over a period of time, and normally that's like 20 years. In the 10-year period, you may be able to actually borrow the money. And the attractive part where a lot of people get attracted to this is the borrowing against your home equity is actually normally a lot less expensive in terms of the interest rate. But you also need to consider the fact that if you default on your monthly mortgage, the bank could foreclose on your property and whoop, take it out from underneath you, and that ain't so cool. So it's not right for everybody, and some people it may make sense for, but please make sure that you understand all the pros and cons and all the benefits and potential risks associated with a home equity line of credit. The best way right out of the gate to learn more about this opportunity is to chat with your trusted loan officer. I'm not a loan officer, I'm just a real estate agent making this video to help give you some more information about what this is and ways that people I see use them quite commonly, and so that you have something to think about and consider and know a little bit more about this after today's video. But the best place to get this information is actually talking to your trusted loan officer and asking them about how this impacts you, and then weighing the pros and cons between the decision makers, whether it's just you or whether you have a family, and figuring out what's best for you in your life. So let's go into 5 quick ways that people normally use these. Number 1, people will sometimes use a home equity line of credit to improve and upgrade their home. They also use it to access a lower interest rate than a credit card if they want to make a larger purchase. If they have other ideas in mind, they might want to just to have that extra money as money in the bank for them, so to speak, for their planning purposes. A third way that people use them a lot is actually to consolidate debt. That's a pretty interesting option. So if you have a lot of credit card debts or student loan debts or a multitude and a host of all those debts, and let's say that they're at a much higher interest rate, people will sometimes use a home equity line of credit to go ahead and pay off all those other debts, so you're only paying the home equity line of credit over a period of time at a much less interest rate, so you're getting more bang for your buck there. The fourth way that people use it a lot is actually helping to bridge any gaps or distances in higher education if they themselves are going to school, or if they have kids, or if they have family members that are assisting and going through higher education. It is expensive, unfortunately, so sometimes people will borrow against their home in the form of a home equity line of credit to go ahead and pay for those expenses. The fifth thing is sometimes people say, hey, you know, we haven't had a vacation in 3, 5, 10, 15 years, whatever the case. We really want to go stay at the Four Seasons in Hawaii, and we really just want to live it up for a couple of weeks, but we don't exactly have the right kind of money available in our bank or on our credit cards to make that happen. Oh, but we've had our home for 10 to 15 years and we have a huge amount of equity in it. Why don't we borrow against it and go ahead and live it up for 2 weeks? Well, living it up for 2 weeks might be something that would be really fun for that 14-day period. What may not be fun is the next 20 to 30 years of paying it off. And especially if you default on the mortgage payment and now you lose your house, your shelter, the place that you call home. So, I mean, it's really important to understand these trade-offs and really the consider them what's going on. I mean, even with like the first thing that's very common that people use it for with improving and upgrading your home. I mean, if you're improving and upgrading your home, you may or may not get your money out of those renovations depending on what you're doing. So it's something to consider and something to think about. If you have more questions about this, I highly encourage you and strongly suggest that you reach out to a trusted loan officer in your area, a local loan officer, and ask them how this impacts you, and ask them if it's right, and give them the reasons why you're thinking of this, to see that way they can help you explore all of your financial options and all of the options available to you so that you make the best decision for you and your family. If you have any questions about this, if you'd like to see another video, I'm going to put my, or have an idea for another video rather, I'm going to make my contact information available right now. Please feel free to reach out to me, even if you just want to say hi. I always enjoy hearing from you. Now, if you learned something new from today's video, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. And number 3, please share this video around with someone you know is going to be able to help. Thank you so much for watching today, and in between now and next time, I'm wishing you and yours all the love, wealth, abundance, and happiness in the world. Thank you so much for being here today. We'll see you soon.